Hi, I'm Pattu from freefincal. This is my stock portfolio update for April 2021. This is part of my retirement portfolio, and at the time of making this video, the value of this is just 20% of my equity mutual fund retirement portfolio, about 11% of my total retirement portfolio. So it's a very small amount. It started out as an experimental portfolio, but it has grown to a little extent. So the perspective with which I am investing in direct equity may be very different from the perspective with which you may be investing. Your expectation may be different, and so on. My aim is to build this kind of an ideal retirement portfolio where you have at the time of retirement an income from pension which is equal to the expenses in the first year of retirement, which is called income flooring. I have a video on that. Then you have liquid assets and fixed income and equity to handle inflation, the changes in current expenses, recurring expenses, etc., etc. Then you have passive income from few sources. Then you have active income just for productive time pass. It's not really necessary, just for keeping yourself engaged. Then you have dividend income from an untouched direct equity portfolio. That's where this comes in. If I have some big emergencies, then I could use this direct equity, or I could just leave it as a legacy for people or so on, or I could just use it for discretionary spends, whatever. So this is my kind of thinking, and your thinking may be different, your age may be different, your perspective may be different. So you cannot expect to agree with all my decisions and suggestions here. So I made it very clear when I started. I want to choose stocks with basically no analysis, little or no analysis. I will choose low volatility stocks with a sound financial health, and sometimes I might, once I check low volatility, sometimes I look at their momentum once I create that portfolio. For example, I have not changed my stocks. Within that, I look at momentum and chase momentum, but the primary criterion is basically low volatility and sound financial health. I'm not afraid to pick expensive stocks. In fact, I think it makes a lot more sense to keep buying stocks which are trading close to their all-time high. Value investing has got multiple risks most people don't talk about, and I have talked about this earlier. And I don't see why people should fear dividends. Dividends is not your stock giving dividends is not going to give you anything extra. The return is going to be the same, but it's realized gain, and that much is cannot be disputed. At the moment, in the last financial year, the total annual dividend was about 30% of my 1 month's expense. Now my aim is to make quarterly dividends is equal to 1 month's expense. That will take some time, but I'm getting there. So these are the weights. So Asian Paint is now the highest, 16.33%. Hindustan Unilever next, TCS, Infi, Pidilite, HDFC Bank, and then it drops down. So Colpal at 5%, ITC at 2.8%, Wipro 1.88%, Marico 1.85%, and so on. I have not invested any amount since the 1st of March 2020, basically because of not enough funds. So I'm waiting for some funds to accumulate, and then I'll invest. But please remember, I'm investing as usual for in my mutual fund portfolio for my goals. This is on top of that. So in this, the dividend return that you see is basically total dividends divided by the total investment. Capital gains is total capital gains divided by total investment. Total return is basically dividend return plus capital gains return. And the CAGR is defined as basically you calculate the average years of investment. In my case, it's 0.8. This should not 0.7, it's 0.8. And you use that, and you use the standard compounding formula using the total return. Using the average years on the total return. So this is the list. You can I've just listed it. It's not a big deal. You can go to the article and have a look at it. I don't want to read it. What's more important is that the total portfolio return, the absolute return, is 22.45%. Out of this 22.45%, about 1% is from dividends. The annualized return, the CAGR, is 28.55%. You shouldn't take it too seriously because in the last 7 months, the bulk of the investment has come. So it's still a young portfolio. Don't worry too much about the CAGR and all that. If I had made the same investments and if I had made the same redemptions in UTI Nifty Index Fund Direct Plan, I would have got an absolute return of 18.64%. This month, the absolute return is lower than the absolute return of the stock index. The XIRR is 19.46%. You can notice that if you have been tracking my portfolio, then you will notice there's a lot of fluctuations in the returns. That's because the portfolio is young. As the portfolio ages, these fluctuations will keep dying down. So that's about it. So far, it's been okay. I've been having fun building this experimental portfolio, and I'll see you later. Bye bye.